Imagine for a second that you made a financial sacrifice. You stopped going out to eat. You stopped hanging out with your friends. You stopped clubbing, and instead, you focused on working your job and saving all the money that you could. And perhaps you saved a couple $100s at this point. And then imagine for a second you started investing in the stock market because you heard that since the 1950s, the S&P 500 has never returned less than 3.7% in any 15-year rolling period. So you start investing and you start to watch your money grow. In just a little moment, your money grows to your first $1,000. And then after a few more years of that, it grows to $10,000, and then $20,000, and then before you know it, it grows all the way until $100,000. And it feels like for the first time in your life, you could finally escape your 9-to-5 and you can finally enjoy your life the way that you've always wanted to. You wake up, the morning sunlight hits you in the face, and you think about all the potential that your future holds. So you take your phone out, you open up your brokerage account, and you check. And that's not a fictional story. That's a story of yours truly, because I worked my butt off, made so many sacrifices to start investing because I heard it was the responsible adult thing to do, and just recently I wake up and see that I've lost $60,000 in just 30 days because the market just took the biggest dive since 1987, just 2 years before I was born. Be honest, what would you do at this point if you went through the same thing? I think it's easy to watch this on your computer screen or maybe watch it on your phone during a lunch break and think to yourself, yeah, I'd do the right thing, but actually feeling this for yourself? And when it comes to my financial investments, I always look up to one of my biggest inspirations, Mike Tyson, who said, everyone had the game plan until they get punched in the mouth. So in today's video, I want to share with you exactly what I'm doing with my money from a real world investor's perspective about what's going on, because the Fed is about to pump $1.5 trillion into the economy to try to save it from total collapse. So I'll show you my portfolio, what's going on, and how this has affected my dividend income. And hopefully by sharing with you my story, I'll give you some insight, maybe give you some confidence to continue investing and continue being awesome. And if not, then you could just laugh at how this idiot should have shorted the market by putting all his money on put options in the futures market. Whatever that means. Complex investing words? Compound interest. I know that word. Let's begin. Hi, my name is Andrei, Jikh, and I'm here in the Soviet land, Mother Russia. Well, not yet, but it seems like it's going to be by the way things are going now. Now, I like to make these specific dividend video portfolio updates once a month, just like I've been doing since January of 2019, as a way to keep track of my progress and my journey, kind of like a video diary to show you exactly what's going on with my money through the good times, the bad times like we're in now, and for anyone who watches my silly videos, a more technical look at what an investor's portfolio is doing in any given month with my stock portfolio of close to 100 stocks. He's over diversified that pay me money to sleep passively and do nothing. Because call me crazy, I want to make money in the stock market regardless of what it's doing. Whether it's going up or down, I still want to make money. Kind of makes the most sense to me though, because if I did it any other way, I'm not so sure that right now I would have the courage to hold on to all of my stocks and not want to just sell everything, because in the last month alone, the clock was rewound 4 years. In the last 30 days, over 4 years of investing progress has been lost. But now, in my humble opinion, is the perfect time to start investing, because you have just been given a time machine to go back in time and right all the wrongs that you've made when you've promised yourself that you would start investing, but didn't because you heard the stock market was too high or that it was dangerous. Because when referencing all-time highs in the stock market, that's when people seem to want to start investing. When they see everyone else around them making money, that's when fear of missing out hits you, FOMO. But that's precisely what you don't want to do. Now is the time to really get serious. You would not believe the amount of comments that get left on my videos saying, this time it's gonna be way different. But those people think they're really clever because they'll use words like Federal Reserve, printing money, 0% interest rates. If you really ever want to sound smart, just use those words and you sound like you know what you're talking about. But I can never get enough of those vague predictions with no deadline, peppered with some technical words, buttered by some sass. delicious.
It's gonna make 2008 look like nothing.
But it's precisely those words that perpetuate this myth and fear of uncertainty that makes this situation far worse than it actually needs to be. But ask yourself this question: has this market crash fundamentally changed the way that businesses make money in America and everywhere else in the world? Do you think Delta's gonna stop losing our luggage all of a sudden? Cruise lines are just gonna sit empty and people will never vacation again? We're all gonna become farmers who revert back to the gold standard, use gold flakes to pay for everything, grow our own food, never go out to eat, never watch movies, just gonna stay home all day? Of course not. We're gonna experience some of those effects temporarily, but whatever goes up in the stock market, of course, must come down, and it will always come back up. Because in 2008, the economy collapsed due to years of making poor financial decisions in the real estate market and by banks loaning out money left and right and then repackaging those loans into investable assets that people could put money into. And when the real estate market crashed and people did not want to pay their house anymore, not only did they lose it, but the banks that held these assets almost went out of business. Technically they did, but they got bailed out. But in that case, the economy had nowhere else to go. The crash needed to happen. This crash, on the other hand, is entirely artificial, driven by our fear of this illness and exaggerated by the way our government is handling this situation and the media's response to all this. There is clickbait left and right. Just to give you an idea, this video alone will most likely make me several $1,000s in just a few days. That's how people are so scared. But don't get me wrong, of course, this has real-world consequences when you ban travel, when airlines aren't making money because people can't leave their house, and because they're not leaving their house, they're not actually spending money, so theme parks and businesses shut down, employees stop coming to work, all of that, yes, has real-world consequences. But none of those factors are a reflection to the way that those businesses fundamentally operate. Sure, I would not be surprised if in the next 6 months to 1 year, the market continues sliding lower and lower. Just a few minutes ago, my girlfriend Corey, who works in the event planning industry, texted me saying that they cut her hours. And I would not be surprised as more and more employees get called in less to actually go to work, and that's gonna have a ripple effect on this entire economy. But I want you to remember, this stock market crash did not happen because of things that people were screaming about and trying to predict, like stock buybacks, 0% interest rate, Federal Reserve printing money, insert scare metric here. None of them were the reason why this stock market crashed. Nobody saw it coming. This is exactly why there's a strong likelihood that this entire thing is extremely exaggerated and will only last as long as there is fear, which if I had to guess would be anywhere between 6 months to 1 year when the vaccine gets developed. But now, more than ever, I want you to use these next 6 months to get your act together and finally start investing, because this stock market crash is a gift in disguise, and not a single YouTuber, not even billionaire Ray Dalio, saw this event coming. He called it, but he called it for the wrong reasons, which means he was wrong, which also means his task failed successfully. So without further ado, let me show you my stock portfolio and show you exactly what's going on and how this whole thing is affecting me. And here it is. In 1 week, I have lost 19.05%, which is roughly $35,000. And in 1 month, get this, I've lost 20.82%, or roughly $60,000. Now, most people at this point, which, nope, I'm exiting, I don't want to lose any more money. And that's just human nature, because we're more motivated by the fear of losing something than we're encouraged by the potential of gaining something. But the cool thing about the way that I invest is that it does not matter to me. At the end of the day, I do not care what my total sum value of my portfolio actually is. And here is why. My goal is to generate enough income to invest to create passive income to support a modest lifestyle. And while it's true, most of my income is coming from YouTube related sources, which is crazy lucky of me, but it is far from perfect. So to balance that out, I want to create a passive income source that is not dependent on me working so hard and is not dependent on the stock market needing to go up in value. And what I'm most interested in is comparing my year-over-year dividend income just to show you how amazing this strategy really is. But keep in mind, the stock market is in free fall, and the naysayers are telling everybody to sell their stocks because the dividends are about to be cut, the world is about to fall. So let's see if they were right and try to make sense of all this madness.
Madness? This is Sparta!
Sorry, I don't know how to transition out of that, so let's just forget that happened. And starting off, February 1st, I was paid by Chatham Lodging Trust, a REIT, which paid out $17.60. Now, REITs get taxed as ordinary income, not like dividend income, so you're gonna be paying a little bit more in taxes. And by law, REITs are required to pay out 90% of their profits back to shareholders, and because of that reason alone, they tend to use debt to finance their growth. And because of that, it can be a little bit more of a risky investment, so you wanna tread carefully, and it is so tempting to throw more money at this one, but I wanna be careful because they're in a risk of getting their dividend cut in a fluctuating economy. So just saying, be careful. Also make sure to pay attention to the dividend safety scores for each stock that I call out. If a stock falls between 41 to 60, there's a risk of the dividend being cut. 61 to 80, the dividend is most likely safe, and anything 81 and above are Dwayne Johnson's. Rock solid. Keep in mind, all dividends can of course be cut, but I am using Simply Safe Dividend Safety scoring system, which looks at things like payout ratios, which judges how much a company is using its money to pay its investors like myself. It's looking at debt levels to see how it's leveraging money that it borrows to finance its growth. A lot of the REIT sectors that we'll be looking at do this. We're looking at things like how a stock is affected in a recession. We're also looking at cyclicality, which is how many bicycles a company has sold in a given year, I think. Or it has something to do with how different sectors perform better during certain economic cycles. I think it's the bicycles. It's the free cash flow that we're also looking at, earnings reports, and return on invested money. So a lot of different factors, and no, Robinhood does not show you this data, so don't ask which button it is. There is no spoon. And continuing on February 4th, I was paid thrice from this lovely thriple. CVS, Jizz, which never gets old to laugh at because I'm a child, and AT&T, $8, $22.05, and $53.56 respectively. On February 8th, CZNC, Citizens and Northern, paid out $16.20. And while I've owned this bank for a very long time, and it's got a great 5% dividend yield, they've also got an uncomfortable score of 33 dividend safety score, which means there is an uncomfortable scenario where they could cut their dividend, especially in tough times like this. And if that was to happen, the stock price would crater in value and my investment would lose a lot more. Now, I don't really care too much about the principal value of my investment. I do care that my investment goes up over time, and the dividend growth has just been extremely slow, and that's why I want to get rid of it and find something better, because I want to have a stock that's both appreciating in principle, ideally, as well as the dividend growing together in line. So I'm just going to sell this one and find a better opportunity in the stock market, because just like dating, there are plenty of fish in the sea. February 11th, I got paid by Texas Instruments, 90 cents, which pays for my Puzzle and Dragons addiction, and $4.30 from American Express, which, by the way, I just got the Amex Platinum card. I'm doing a review video. I'm so excited to show you the footage that I filmed. This video is not sponsored by Amex, but the best thing to do is to invest in companies whose products you actually use. And then February 12th, BTI, British American Tobacco, paid out $25.89. I also own Philip Morris. Cue the immoral investor comments.
Oh, he knows. That makes him even worse.
And February 15th, I got 6 dividend paychecks from O Realty, which is one of the most dependable REIT stocks you can own with moderate growth, and it's great for conservative investors. I wish I had more, and I was paid $10.93. I also got paid $8.88 from I think that's how you pronounce it. Skate. I'm sorry, I don't know, I just made that up. $23.60 from AbbVie, and then $47.69 from ONEOK, which is one of my go-to natural gas companies if you want to diversify into a stock that has high yield and a good growth at an insane 10.41% dividend yield. And usually double-digit dividend yields are extremely dangerous, and I would never chase them in a million years, but this one appears to be on the safer side of ridiculous 10.41% dividend yield. And moving on, I also got paid $12.88 by NNN and $44.22 by OHI. And then on February 22nd, I got paid 3 times by KMI, $15, HRL, $2.33, and STAG for $6. And then February 22nd, GEO paid $13.44. And out of all the stocks that I own, I would say this one is the one I'm least proud of owning because I don't think this REIT should exist for people to make money off of, because I think it's kind of wrong to make money off of correctional facilities. And John Oliver did a really good episode about this concept, and I really want to do a separate video about how to balance being a moral investor and actually making money. I think that'd be such a cool concept to explore, but not the scope of this video.
Andrei's immoral. Dislike, unsub.
And then WRK. Work, paid a dividend of $4.65. I gotta pat myself on the back there. Good job, Andrei, for that creativity. And then February 29th, the last day of income, I got a whopping 5 checks from Williams-Sonoma, $8.64. CLDT again, which makes no sense because that's the first dividend I mentioned. Robinhood, be acting up again. Robinhood, get it together. You're like that girl who's had way too many daiquiris, please. $20.35 from Peak, $26.97 from Well, and 9 pennies from Siri. Hey Siri, thank you for that 9-cent dividend.
You're welcome.
To be fair, it was a free stock. So the grand total comes out to be $394.17. How does that compare to my last year's February? It's actually really close at $371.41, which still represents a growth of 6.13%, which is super in line to my 10-year average at 6.2%. So it's literally business as usual. Now I'm gonna update my income in my spreadsheet to reflect the new stock sale, which is gonna drop my annual dividend income just slightly, but now I can use that cash to invest in a different stock that's a better buying opportunity. And by taking on this realized loss, I can write off up to $3,000 in taxes per year in a technique called tax loss harvesting, which is really amazing, and it works really well for people in higher income brackets, and it only works for investments held in taxable accounts. Of course, Betterment and Wealthfront do this for you automatically, but you can also do this yourself. It's not that hard. Look at you go, making money already while you're losing money. Amazing. But Andrei, I don't get it. Why is this such a good way of investing? If you put in $1,000 just to get back $40 a year, it's gonna take you years just to make back that initial investment, especially right now where you're losing so much money. I don't get it. These are all great questions, and here is how I look at it. What people forget to take into account is that the stocks that we buy at principal value will actually appreciate and grow in time. Except for like right now when stock prices are just falling like crazy, but over the long term, this is how it should work. And also, dividend increases account for a huge portion of our income, because with time, these companies actually increase their annual dividend income, assuming that they're making money and that they have healthy, low payout ratios. But if you try to time it, try to sell it and pull out, that's when it doesn't work. So the longer you stay in, the better the strategy ends up working. And if you'd like to start investing right now, consider downloading Webull, fund your account $100, get up to 2 free stocks, one of which can be valued up to $1,400. Maybe download Robinhood, get a free stock, but make sure you're not a day trader, you're not an options person or a crypto person, because Robinhood is not good for that right now. They're just not reliable. And if you're not sure what to invest in right now, don't panic. Continue dollar cost averaging into the market. Consider buying an index of the total market, maybe SPHD if you're a dividend person like me. Look into VTI. It's all great, and I promise you're not going to regret doing that. Love you all. Thank you so much, and I'll see you all very soon. Bye-bye.